Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 21st day of August 2019, and this is the daily report for gold and silver. Earlier today, the Federal Reserve released the minutes from last month's FOMC meeting. Although that data is now about 3 weeks old, market participants as well as analysts were looking at any sign, any clue to glean the future direction of Fed in regards to their monetary policy and rate cuts. They were left wanting for more because there really wasn't that much new information available during the minutes. However, that could easily change because on Friday, the opening speech at Jackson Hole's symposium is going to be by Chairman Powell, and there we can expect some information, some clue as to the current plans of future rate cuts. Traders, just before the minutes were released at 2 o'clock in New York, we had basically an unchanged gold market. Once they were released, we saw a trade from about $1 higher to about $1 lower. However, as market participants read more into the statement, we did see a slight decline in both gold and silver pricing, with gold closing down by $3.10, currently fixed at $1,512.60. Silver down about 0.3%, and that is currently trading at $17.09.5 after factoring in a decline of approximately 5.5 cents. A little bit higher on the dollar index, providing some headwinds for the precious metals. Platinum actually bucking the trend, gaining $2.30, 855.10. And lastly, palladium losing about 1.75% at 1463.70. Let's take a look at our technical studies. Interesting interpretation of the Fed minutes that were released today. When we look at the CME's FedWatch tool, we can see that in terms of the probability that they will leave rates alone come September, that has actually now grown to 1.9%, and that's up from a 0% probability. This market is really resting upon whatever statements come out during Powell's speech on Friday. And my belief is if he alludes to another rate cut in September, we most certainly will see gold move to higher ground. However, anything can be expected to come out of Chairman Powell. Gold currently at 1512.60. We are looking at a weekly Japanese average chart, and when we do that, we can see that the trend, while it has weakened a little bit from the prior 2 weeks, and I say that because of the size of the candle, we are still getting this absence of the lower wick, which is critically important in an uptrend. It just says that at no time during the week did market forces take prices at or below the midpoint of last week. The only thing we can say is that right now, the size of this candle is much smaller, but it is still Wednesday with 2 more trading days to go. And when we look at our daily chart, I've just put that up. There's a couple things that I believe are noteworthy. The first thing is we do have 3 separate moving averages here. At the bottom, we have our 200-day in red. Blue signals the 100-day moving average. These are simple moving averages. And then the 50-day. The one thing that we can easily discern from this chart is that at least in regards to the 50 and 100-day, they are moving further apart. That indicates that there is still some good energy left in this trend. When we look at the 200-day and compare it to the 100-day, we can see that these lines have been almost parallel over this last month. The other thing that we can see is we are back in this kind of consolidation base forming trend as we have had some lower pricing. However, the market has definitely held above 1500 A. B, we have seen a series of higher lows, especially today, but we also today got a lower high, and that really tells me a sideways trading market. The third indication of that is color in candles, and as you can see, we have a red, 2 greens, 2 reds, a green, and now a red. And that tells me that the market is either A, forming a base, consolidating at this price point before moving to higher ground, which is my current market model and assumption, or it is having a decreasing range prior to moving back down. I don't think that that is as high of a probability. Traders, my recommendation is to maintain your current long position and to maintain your stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.